degenerates, perma-bears, market makers, and everybody in between. Welcome back to your favorite weekly outlook report from Trades and Gains. I'm your host, Max Pitts, and this week, buckle up, Buttercup. It's loaded like a Vegas slot machine about to jam. Now, the markets have been doing their best impression of a SpaceX launch, straight up, but now it's turbulence time. We've got Powell. We've got Powell again playing footsie with the rate cuts, big tech earnings that could go from AI hype to AI yikes, and a jobs report that could end the soft landing fairy tale once and for all. Let's break it down, roast it properly, and give you the only breakdown that's more caffeinated than CNBC on Fed Day. Last week, in a nutshell, let's kick things off here. The S&P 500 ended up 1.5%, fresh record close every single day. The Nasdaq was up 1.3%. AI still paying the bills, and the Dow was up 1%. Boomers are back in the pool, baby, and don't worry because lifeguards are on duty. But all that euphoria, it's facing a gauntlet this week. Let's go ahead and make like some curry and get spicy. So we got the Jerome show on Wednesday. Powell steps up to the mic like a nervous dad at karaoke night this week. The setup, rate cuts, not this time, but tone, that's what's going to matter here, folks. Think Fed speak meets Shakespeare. Markets are pricing in a 64% chance of a September cut. Anything less, expect some serious tantrums and kicking and crying. Watch for any mention of soft landing because that will give you a hopium boost for you to take another huff. And dissenters equals a bond market meltdown. Why it matters: if Powell flinches or even clinches his butt cheeks, there will be a melt up. If he tightens his jaw and says inflation's not done, go ahead, duck cover, and short everything that you love. Maybe buy some GLD while you're at it. Now, we also have the July jobs reports. This is the main event. Forget everything else. Jobs are the soft landing's backbone. Now, our expectation here are 101,000 jobs. That's light work, baby. Unemployment is going to remain steady at 4.2% like we've been seeing it all year, and wages are going to still be sticky, icky at 0.3%. Now, why does this matter? Too strong equals the Fed stays hawkish, and too weak equals recession whispers. Middle of the road, good luck parsing that because there's a better chance of Ray Charles ever seeing. Now, we also have some big tech earnings. The AI stress test. It's coming in hot and heavy like a woman in heat. Welcome to the Magnificent 7 week. Apple, Amazon, Microsoft, Meta, all up. Time to see if AI is still the golden goose or a cooked one. Anyways, Microsoft, we have Wednesday, AI monetization or just burning cash here. Meta is on Wednesday as well. Are reels reeling in those dollars? I don't know. We finna find out though. Apple's on Thursday. iPhone upgrades, Vision Pro hype. What kind of bullshit are they going to spew on us now? $2,500 iPhones, $5,000 MacBooks. Amazon Thursday, AWS or bust, because that's all anyone cares about when it comes to them. Now, why does this matter? These names are the market. One cracks, it's all downhill like a Peloton earnings call or a animal getting stuck under a Peloton treadmill. Now, we also have a macro data dump. And no, I'm not talking about the number 2 in the toilet, but just a lot of macro data that we're going to get. Why not throw everything at traders in 1 week? Because, it's one thing we love, a good old stress test to, wake you up in the morning. Releases, we have GDP on Wednesday, estimated up 3%. Core PCE Thursday, estimated at 0.3%. And consumer confidence, ISM, JOLTS, ADP. It's a macro buffet week, folks. Now, why does this matter? Sticky inflation plus hot growth equals no cuts. Weak growth plus rising wages, however, stagflation alarm bells, basically. Middle of the road, market rally roulette. It's a scalper's market if we get in the middle of the road. That's not the best, you know? But, and as Tom Cruise says, show me the data. We also have the trade deadline looming, by the way, Friday. Trump's tariff deadline hits Friday. So far, Philippines, 0 tariff deal, 19%. Math is hard. India and EU equals political purgatory. Yeah, not great. And China equals maybe, probably not. Now, why does this matter? New tariffs equals a market tantrum. Expect autos, industrials, and semis to puke first. Now, let's talk about our full calendar. Monday, we have Dallas Fed Manufacturing, earnings from Whirlpool, Tilroy, and Waste Management. Tuesday, S&P, CoreLogic, home prices, JOLTS, and consumer confidence. Boeing, Starbucks, SoFi, Visa, UPS, Merck, Spotify, P&G, Booking, and Caesars. On the earnings front, Wednesday, we have more macro data. FOMC meeting, no cut expected. GDP Q2 advance, ADP payrolls, core PCE quarter over quarter, and pending home sales, which are expected to be flat. Earnings, we have Microsoft, Meta, Qualcomm, Ford, Robinhood, Hershey, Altria, Harley, and Kraft Heinz. Thursday, macro, we have personal income and spending, core PCE month over month, initial jobless claims, and employment cost index. And earnings, we have Apple, Amazon, Coinbase, MasterCard, Reddit, Roblox, CVS, Mr. Bristol Myers. And finally, to wrap off this long ass week, we got macro data on Friday, July non-farm payrolls, the big one. Unemployment rate, average hourly earnings, ISM manufacturing index, and University of Michigan sentiment final. And then earnings, we have Exxon, Chevron, and Colgate there, folks. Now, here are some of the key takeaways from your boy Max, from Big Papa Max here. Powell's mic drop moment could swing bonds and break bulls like they are some wild horses. Big tech earnings equals all or nothing. Jobs data decides whether we cut or cry, and tariffs could torpedo global exposure plays. And finally, GDP plus PCE equals rate cut calculus time. Markets are at all-time highs, folks, right? Feels good. That's exactly when the rug gets pulled, by the way. Stay sharp. Don't chase green candles out there. Wear a condom. And for the love of Powell, hedge something. Don't forget to like, comment, and subscribe if you're holding tech through this week. You're braver than a leveraged biotech bull if you're doing that. By the way, this is not financial advice. This is just a little bit of comedy with some real reality thrown in there. Hope you all have a great week, and I will see you guys for our daily market recaps. Have a good one.